I was looking at my phone this morning, just sort of staring at it while my coffee was brewing.
Mm-hmm.
And I had this thought. We treat these things like they're just magic, right? You tap a piece of glass and the whole world appears.
Right.
But if you peel back the layers of that phone or, an electric car, it's not magic you find. It's dirt. It's rock.
It's geology. It's this massive industrial machine digging holes in the ground to get the metal that makes the magic happen.
Exactly. It's the great disconnect. And today, we're going to look right at the geology. We are doing a deep dive into a company called Sibanye Stillwater.
Ah, yes.
And I have to be honest, when I first started reading these reports, I thought it'd be a pretty standard story. Company digs hole, finds gold, sells gold.
A familiar tale.
But it's so much more complicated. It almost feels like a company having a massive identity crisis.
That's one way to put it. I might call it more of a metamorphosis, but you're not wrong. They're straddling two completely different eras.
So let's start right at the beginning. For anyone listening who hears Sibanye Stillwater and, thinks it's a fancy law firm.
Or a bottled water brand.
Yeah. Let's strip away the jargon. Who are these guys?
Okay, so in the simplest terms, Sibanye Stillwater is a multinational mining and metals group. They were actually born in 2013, spun out of gold fields in South Africa.
Okay, so their roots are in gold.
Deep roots. But today, if you look at their profile, they are one of the world's largest producers of platinum, palladium, and rhodium.
PGMs.
The PGMs, exactly. And they're still a top-tier gold producer.
So they're big. They dig up the really expensive stuff.
They do. But here's the modern twist. They aren't just digging holes anymore. They've been expanding, and pretty aggressively, into what they call green metals.
Green metals.
Think battery-grade lithium, nickel, and maybe most surprisingly, they're becoming this huge recycling operation.
So they're trying to become the engine room for the green economy.
That is the pitch.
And looking at the map in these documents, they're all over the place. I'm counting 5 continents here.
You are. The Americas, Southern Africa, Europe, Australia. It's a massive global footprint for a company that, a little over a decade ago was just a South African gold miner.
Okay, let's unpack that because that's the first question that comes to mind.
Yeah.
If they're everywhere, what are they actually doing where? Is there a center of gravity?
Oh, there is definitely a center of gravity. And it is heavy. You just can't understand this company without understanding the SA region, South Africa.
Okay.
In 2024, that region alone generated 73% of their total revenue.
73%. Wow. So 3/4 of all their money is coming from one place.
And get this, it's even more lopsided when you look at the people. The South African operations account for 97% of their workforce.
Wait, pause. 97%.
97, yeah. We're talking about these massive, really labor-intensive operations, the deep-level gold mines like Beatrix and the huge PGM operations like Marikana. They're basically underground cities.
So really, this is a South African company with some very interesting international projects.
You could say that, but those projects are incredibly strategic. Look at the U.S. region. They've got the Stillwater and East Boulder mines in Montana.
Right, also PGMs.
PGMs, yes, but they're highly mechanized. It's not thousands of people with drills. It's heavy machinery. And then still in the U.S., you have something called Reldan.
I circled that one. Reldan in Pennsylvania.
Yeah.
It didn't seem to fit the pattern. It's not a mine, is it?
No, and this is so important. Reldan is a recycling facility. They take in industrial waste, think old electronics, plating sludge, and they use chemistry to pull the precious metals back out.
Urban mining.
That's the term. It's fascinating.
And then my eye caught Europe on the list. We don't usually talk about mining in France or Finland.
True, but that's that green pivot we talked about. In France, they own the Sandouville nickel refinery. And in Finland, it's the Keliber lithium project.
Ah, so they're setting up shop right in the backyard of the European automakers.
Exactly. They want to be the local supplier for all those batteries for the Volkswagens and BMWs of the world.
And a quick stop down under in Australia?
That's the Century operation, which is for zinc, and the Entelile copper project.
Okay, so let's recap the board. We've got the massive labor force and the cash cow gold operations in South Africa.
Mm-hmm.
Then high-tech platinum and recycling in the U.S., battery metals in Europe, and zinc and copper in Australia.
That's the portfolio. The whole strategy is about mitigating risk. If gold prices crash, maybe lithium is up. If there's trouble in one region, the others keep the lights on.
Speaking of keeping the lights on, Let's talk about the money. Because running an empire on 5 continents sounds expensive.
Yeah.
And I was looking at their 2024 financials, and it looks complicated.
It was definitely a roller coaster year.
Okay, give us the good news first. Who was the hero of 2024?
The hero, without a doubt, was gold, specifically the South African gold operations. You've probably noticed gold prices hitting record highs.
Hard to miss that.
Well, Sibanye Stillwater rode that wave hard. Their adjusted EBITDA from SA Gold, that's basically their operating cash flow, it went up by a staggering 216%.
216, that's a huge jump.
It is. It really helped push their overall revenue for the second half of the year up by 7%. If you only looked at the gold division, you'd think they were just printing money.
Okay, but then I scroll down to the bottom line. Profit attributable to owners, and it's bright red. A loss of 7.3 billion rand for the year. How do you make record cash on gold and still manage to lose over 7 billion rand?
Welcome to the wonderful world of impairments.
Okay, we need to decode that word. Impairment. It sounds like something that happens after a bad accident.
It's sort of like that for a company's assets. So imagine you buy a house for $1 million thinking you can rent it out for a huge profit.
Okay.
But then the rental market completely crashes. Suddenly, that house is only worth $600,000. You haven't sold it, but on paper, you have to admit it's worth less. That $400,000 drop is an impairment.
So Sibanye had to admit that some of its mines just aren't worth what they thought they were.
Exactly. They took a hit of over 9 billion rand in impairments, and the main culprit was the PGM market. Platinum and palladium prices have been really, really low.
So the U.S. mines in Montana got a big write-down.
A very big one. And it wasn't just a paper loss. They mention a major restructuring at the U.S. operations to cut costs. They managed to reduce their all-in sustaining costs by 27%.
That's a huge cut.
It is. It shows they're serious. They're trying to stop the bleeding in the platinum division while the gold division pays the bills.
Which brings me to debt.
Yeah.
I mean, usually when a company is restructuring and posting losses, the banks get nervous. Are they in trouble?
They seem to be managing it, and quite cleverly. The report shows their net debt to EBITDA ratio at 1.79.
Is that panic territory?
It's getting a little tight, yeah. But then they did this interesting maneuver, something called a stream financing arrangement.
Stream financing. Sounds like Netflix for gold.
Not quite. Think of it more like an author getting a big advance on a book they haven't written yet. They sold a percentage of their future metal production to get a big chunk of cash today.
So they're borrowing from their own future to stabilize the present.
Precisely. They use that cash to pay down other debt, and their pro forma ratio drops to a much healthier 1.08. They call it capital building.
Okay, so they're stabilizing the ship. But you can't save your way to growth. If mining is getting harder and prices are all over the place, what's plan B?
Plan B is where that identity crisis gets really interesting. It's the circular economy.
Right. Mining without the mine.
That's it. The whole idea is that we've already dug up enough metal. It's just sitting in the wrong places. It's in landfills, old cars, and in these things called tailings.
Tailings. That's just the old mining waste, right? The sludge.
It's the sludge left over after you pull the metal out. For 100 years, miners just dumped it. But old technology wasn't perfect. There's still gold and zinc in those piles.
So they're literally mining their own garbage dumps.
Yes. They have DRD Gold in South Africa doing this for gold, and the Century operation in Australia doing it for zinc. And it's brilliant because you don't have to blast rock, so it's cheaper.
And you're cleaning up old toxic sites at the same time.
It's a huge environmental win.
It sounds like a no-brainer. But I have to ask about that green metals bet. We mentioned nickel. I've been reading that the nickel market is just a total disaster right now.
You're not wrong. The nickel price fell almost 8% in 2024.
But why? I thought we needed all the nickel we can get for batteries.
We do, but the supply just exploded. Indonesia found a way to produce massive amounts of nickel really, really cheaply, and they just flooded the market.
So Sibanye bought into nickel right before the price crashed. That's painful timing.
In the short term, yes. It looks very painful. But this is where the long-term view comes in. Sibanye is betting that the Indonesian supply is dirty nickel. It has a very high carbon footprint. They're betting that European car makers, with their strict ESG rules, will eventually pay a premium for clean nickel from France and Finland.
So they're banking on a green premium, that not all nickel is created equal.
Exactly. It's a long game. Mining isn't about next quarter, it's about the next decade.
Let's shift gears a bit. We've talked about the rocks and the money. Let's talk about the people. Because, you could have the best strategy in the world, but if your communities are unstable, you aren't producing anything.
Especially in South Africa.
The report uses some pretty flowery language.
Yeah.
They talk about the Umdoni tree and their values, I cares. It sounds a bit corporate, doesn't it?
It really does sound like marketing fluff at first glance. The Umdoni tree is their symbol for shared value, and iCaries is an acronym for innovation, commitment, accountability.
Standard stuff you see on a poster in the break room.
But then you get to the section where they describe their operating environment, and the fluff just vanishes. It gets very, very real. They call it a tale of two worlds.
And what does that mean in practice?
Well, you look at their Western operations, US, Europe, Australia, the government's work, the roads are paved, the police show up. Your biggest headache is maybe a permit delay.
So South Africa.
The report is brutally honest. It describes the environment there as having unacceptably high unemployment and poverty. It explicitly mentions poor governmental capacity and the risks of crime.
That's surprisingly candid for a corporate report.
It has to be. In South Africa, a company like Sibanye Stillwater can't just be a business. They have to step in where the state is struggling. They're a massive employer with a huge focus on local hiring. And get this, the report notes that their CEO is the chairman of Business Against Crime South Africa.
Wait, the CEO of the mining company is leading the National Anti-Crime Initiative for Business.
That tells you everything you need to know. For them, social stability isn't some nice-to-have charity project. It's an operational necessity.
So that Umdoni tree isn't just a logo. It's a survival strategy.
It absolutely is. They have to support the whole ecosystem just to survive within it.
And with all that complexity, crime, poverty, financial stress, how are we doing on basic safety? I mean, deep-level mining is dangerous work.
There's actually a really positive stat in here. The 2024 results show their main safety metric. The FRIFR is at its lowest level since 2013.
That's good to hear. It seems like, despite all the noise, the operational discipline is still there.
It's a huge achievement, especially given how technically difficult those mines are.
Okay, let's try and pull this all together.
Yeah.
We have a company that started as a pretty traditional South African gold miner. Mm-hmm. They looked to the future and said, we have to change. So they bought platinum in the US, battery metals in Europe, and they started recycling like crazy.
A very hard pivot.
But the transition is messy. Gold is the cash cow, paying all the bills right now. But they're taking big hits on platinum and nickel. They're managing their debt by, selling off future production.
And they're doing all this while straddling two completely different worlds. The stable, predictable West, and the complex, challenging South Africa.
That's it. It's a company in the middle of a transformation. They're trying to turn a digger of rocks into a supplier of green energy materials, and the jury is still out on whether they can pull it off.
It really is a high-wire act. If they succeed, they could be the blueprint for what a modern resource company looks like.
And if they fail, well.
And I think that's the so what for everyone listening. Sibanye Stillwater is a test case. Can a traditional, dirty, labor-intensive industry really transform itself into the engine of a clean future?
And can it stay profitable while doing it?
Exactly. And here's a thought to leave you with. We talk all the time about deglobalization, about the world breaking into these regional blocks.
Right. Supply chains getting shorter.
Sibanye Stillwater is swimming completely against that current. They're spread across 5 continents, trying to hold a global entity together.
That's a great point.
So the provocative question is, as the world splits into these ecosystems, North America making its own batteries, Europe doing its own thing, can a company like this hold it all together? Or will the tension between their stable Western assets and their complex African roots eventually force a split?
Will the Umdoni tree have to lose a branch to survive?
That's the billion-dollar question.
Well, next time you look at your phone or your wedding ring, remember there's a decent chance Sibanye Stillwater either recycled it or mined it from a mile underground. Mm-hmm. Thanks for joining us on the Deep Dive.
My pleasure.
Catch you next time.